Hey everyone, Coach Investor back to another video for today and back with a second video on VinFast, the Vietnamese EV company that really took the stock market by storm a couple of weeks, actually maybe a couple of months back as well. The stock was really not moving and then suddenly in a matter of a week or two, the stock was up 600, 700% or so. But as we said in the previous video, it just did not make any sense at all. So since that first video, the stock is now down 92%. Now, does that mean that you should be buying this stock just because it's down 92%? In my opinion, the answer is here still no. Could this company be a successful company in the future? Maybe. They do have some great future plans. They want to build a complex in North Carolina. They want to expand in Indonesia as well, etc., etc. Of course, we know that these plans are great, but they are cash intensive. It's going to take them a lot of cash. They will have to raise more cash because the company itself is burning cash right now. We're going to have a look at their more recent earnings report. But currently, this is VinFast. Market cap of just over $15 billion. Sales expectations for fiscal year 2024, you increase that by 122%, and then in 2025 by another 64%. If you look at EPS, there are zero expectations there. So basically, you're basing yourself on the sales multiple here, and that's about it. Maybe some margin improvements as well, which are already happening right now. But if you want to expand, if you want to start building more and more factories around the world, of course, your margins will get hit until you're starting to ramp up. But until then, it's going to take a long, long while. Now, the company itself said that in 2025, they will be profitable and maybe break even in 2024. Of course, those are great goals, but as we've seen in the past with Tesla as well, just because you have great goals does not mean you will achieve them on time. Even the greatest companies out there have delays or things that happen that are outside of their control. But hey, those are their goals. In 1 year from now, maybe break even. In 1.5 years from now, maybe profitable. Okay, there will be a couple of quarters where you will be able to keep an eye on what's been happening. If you see that it goes into the right direction, then yes, maybe those goals will be achieved. Now, more recently, there was news that, VinFast is planning to expand aggressively in Southeast Asian markets and starting with Indonesia, and expects to eventually raise a lot of capital to fuel its global expansion plans. This is according to the chief executive officer. I'm not going to butcher his name. The company expects to meet its target this year of selling 45,000 to 50,000 vehicles. Okay. Let's wait and see if that's possible. We're going to have a look at the numbers in just a bit. Now, before I continue with this video, if you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we're on the way to reach 30,000 subscribers. So let's try and do that before the end of the month. Thank you very much. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, some other news that came out not so long ago was the fact that VinFast will actually merge Vingroup's battery arm and Vin Energy Solutions JSC. So Vingroup's chairman, Mr. Pham, announces that he will donate 99.8% of VinES Energy Solutions joint stock company shares to VinFast. The merger is designed to enhance VinFast's self-sufficiency in battery technology and its production chain while increasing its competitive edge in the ever-growing electric vehicle market. Basically, they want to vertically integrate a lot of processes, which, okay, makes sense. Now, if you want a bit more information here, VinES is a member company of Vingroup with legal capital of VND, or the Vietnamese dollar, I believe, of $270 million. The company specializes in researching, developing, and manufacturing advanced lithium-ion batteries for mobility and energy storage applications. VinES also cooperates with leading global battery technology partners and seeks to become a comprehensive energy solution provider. Of course, if this works out, this is going to be a big advantage for the company because we know that batteries are going to become a crucial part of, moving the world to a more sustainable future. Now, when it comes to their third quarter results, so revenue was $343 million. They had cash of $131 million. Gross margin is negative 29.9%. When you look at the deliveries here, they delivered 10,027 EVs, 28,220 e-scooters, 669,000 charging points, and had 126 showrooms. Now, if you want to look at their growth rates, it is pretty impressive when you look at revenue that increased 159% year over year or 4% quarter over quarter. When you look at the gross profit loss, of course, it's still a loss, but you can see already an improvement of 28% year over year. With gross margin, you can see a huge improvement as well year over year, as well as quarter over quarter. When we look at operating expenses, that has increased 7% year over year, decreased 7% quarter over quarter. When you look at net loss, we see here as well an increase quarter over quarter and year over year. So while yes, revenue has increased 159% year over year, we can see that their losses are increasing as well. I mean, free cash flow is still a loss here, but huge increase compared to last year and even last quarter. So keep an eye out on that, especially if you're looking at that break-even / profitability period 2024-2025. Then as for the deliveries, the number we've seen before, so that was an increase of just 5% quarter over quarter. When it comes to e-scooters, an increase there of 177%, so total deliveries increased 94%, but of course, don't be fooled by that huge increase there. The majority of it was e-scooters. And the reason why, they say here, was largely due to the B2B sales. And so the big picture here for the last couple of quarters, you can see that there is some improvement, but again, we've seen this with other companies as well. You see 1 quarter, 1 year of huge losses, nowhere to go. Then we see a couple of quarters where things are getting a bit better. But then when you get to the point of ramping up completely or maybe even reinvesting more, you go back down. So while yes, we see some improvements here, in my opinion, still take it with a grain of salt. And then lastly here, the graph. So like I said, at first, of course, the stock was flat-ish, and then suddenly huge increase here, 646%. That was its peak. I don't know, back in August 28 was the peak, so huge increase there. And then that huge candle, by the way, this is on a weekly, this is not a monthly candles, this is weekly candles. And then since then, well, last 2 months or so, well, stock is down 92%, and you can see RSI is still neutral. It's not even close to being oversold. So yeah, in my opinion, there might be still a while until we find a type of bottom. Now, me, you know my personal opinion on players in the EV space. I own Tesla, it's my largest position. Of course, it's a large position for a lot of people that are watching this channel, and it's going to stay that way for a while. But if, I know people will ask me, if you didn't have Tesla, would you invest in any other company? I always said, even the first video I made about Rivian, said it's the easiest short of the century. VinFast was the other easiest short of the century. By the way, I don't short anything, but it just didn't make any sense when Rivian went public. I mean, the price of it went up and up and up. It just didn't make any sense. But I said, when the price is right, I think it could be a great investment for the future. I still think that this company is going to be a huge success in the future because they did pick a good market to start in. Now, will Rivian outperform Tesla like, for example, our friend Chicken Genius has been saying on X for a while? No, I don't think so. Just because the stock is down or just because the company is smaller or whatever doesn't mean it's going to exceed the expectations just because of that. No, there's still a company behind the stock. It's still burning a lot of money. So yeah, there is that. But going back to VinFast, I mean, if they can produce a lot of cars at the prices that they want, which are pretty reasonable, especially today, like a bit BYD are doing, right? The lower range there, I think they could be extremely successful, especially if they can integrate the battery part, the supply chain, all of that, vertically integrate with the company. Yes, I do think that they have a chance of surviving. Does that mean that at $15 billion right now, I'm ready to bet on them? No, in my opinion, no. But of course, do share your thoughts down in the comments below. Do you own it? Are you trading it? Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.